Watch this before buying a house. 7 things you must know before buying a house. If you're in the market for a new home, then you should know that there are several things to consider before buying. If you don't take this into account, then it can be easy to get caught up and lose sight of what is important when purchasing a home. Hi, welcome to Wealthy Mind, where we'll be talking about topics about earning money and handling finances. We'll make videos for your watching pleasure 2 to 3 times per week. So make sure to comment, like, hit the subscribe button, and click the notification bell to be updated in all of our latest videos. If you want to grow your money, feel free to check out our YouTube channel to help you in your financial journey. Without further ado, let's get started. Number 1. You must know how much you can afford. You must know how much you can afford to pay each month. How much down payment are you planning on making? A 20% down payment is the least expensive option, but if you're not able to afford that much, it's okay. There are other options that may be better suited to your budget. More on those later. What is the total amount of money that would be an acceptable monthly mortgage payment for yourself and your family? The higher this number is, the more likely it will be difficult for you to make this work financially in reality. But there's no harm in dreaming big. Just make sure to whatever figure comes out is realistic before considering buying a home in this price range. Number 2. What is your down payment? The down payment is the amount of money you put towards the purchase of your home. You can put down as little as 3% of the purchase price or as much as 20% as mentioned earlier. The more you put down and therefore borrow, the less interest will be paid in the loan over time. This is because there is less principal outstanding on which interest accrues each month. Number 3. What are the closing costs? The closing costs are the expenses that you will have to pay at time of closing. They typically include lender's origination fee, 3% to 5% of your loan a month, state tax recording fee, which consists 1% to 3%, title insurance premium 0.5% to 2%, appraisal fee typically paid by seller if needed. Number 4. What are the property taxes? Property taxes are a set amount that you pay annually to the government based on the value of your home. The amount varies depending on where you live, but it's usually around 1% of the home's value. This is separate from mortgage payment, which we'll get into later, and can be paid in installments throughout the year with an escrow amount or lump sum at tax time. Number 5. What's the interest rate on my mortgage? The interest rate is a key factor in determining how much you will pay to borrow money. The higher the interest, the more expensive your mortgage will be. The 3 main types of mortgages are fixed rate, a variable rate, and discounted, sometimes called hybrid. If you're planning on staying in your home for how many years, then it could make sense to offer a fixed rate loan, as this means that you know exactly what payments will be each month, regardless of any changes in market condition or inflation rates. However, if there's any chance that you might move house within 5 years, then going with a variable rate may be better, as this means that if rates fall again, then so does your monthly payment. But conversely, if rates rise significantly, then so does yours. Discounted loans offer low initial cost than standard ones, but come with restrictions, such as having limited prepayment options later down the line, which could mean losing out on thousands when trying to sell up early. Number 6. How much can I pay each month on my mortgage? Once you know the price of your dream home, it's time to figure out how much you can afford and what kind of monthly payment that will require. The first step is determining how much money you have coming in each month. This includes your salary or hourly wage if self-employed, bonuses, retirement accounts such as 401k or IRAs. Once you've got a handle on all of those numbers, calculate how much of each paycheck needs to go toward paying off debt, such as student loans or credit cards. Next up, determining how much will be left over for housing expenses after taking care of those other debts and bills like utilities and groceries. This is called discretionary income. Finally, add up all of these figures together so they equal 100%. This will give us a good idea about what kind of monthly mortgage payment we can afford based on our income alone. Number 7. Will my mortgage payments cover homeowner insurance, property taxes, homeowners association dues, and all other bills related to owning a home? When you buy a house, you need to be able to afford the mortgage payment. You should also be able to pay all the costs associated with owning a home, such as property taxes and homeowners insurance. If your monthly payment covers all of these expenses, plus some extra money for an emergency fund, at least 3 months worth, then congratulations, you're ready for your home ownership. We hope you found this guide helpful. The most important thing to remember is that buying a house is not an easy process, but it's worth it. You need to do your research and make sure that all of your questions have been answered before taking the plunge into home ownership. Now that we have concluded these tips before buying a house, what are your thoughts on the video? Comment them down below. We'd love to hear your opinions on this. We hope that you've learned something about our making money and finances. Also, if you're a beginner in stock market or want to achieve your financial goals, please feel free to check out our YouTube channel. Don't forget to comment, like, hit the subscribe button, and click the notification bell to be updated in all of our latest videos. See you!